For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? SIDREC is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to SIDREC. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to SIDREC even though you haven't received a final response yet. SIDREC first checks the eligibility of your claim. For example, is it within SIDREC's claim limit? Is it against a member of SIDREC? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, SIDREC then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. SIDREC's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, SIDREC will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, SIDREC will close the case. So let SIDREC help start the conversation towards resolution. For more information, visit sidrec.com.my or call 03 2282 2280.
Bursa Malaysia has been part of the Malaysian economic growth for over 4 decades. We have been working relentlessly to create a transparent, efficient, and vibrant stock exchange.
While we've been working at building a vibrant marketplace, inclusivity and contributing towards economic growth, we have also channeled efforts and resources towards supporting the community at large. Shares to Share is one such effort, which has been developed to create positive impact towards society and the environment. To put it simply, Shares to Share is a transparent and easily accessible facility that enables investors to donate their listed securities or proceeds from the sale of their listed securities towards charity through Yayasan Bursa Malaysia. You can donate odd lots or even board lots. The funds from the sale of these shares will be channeled to approved charitable organisations and their respective initiatives or projects.
Bursa Malaysia has waived its portion of the transfer fee, clearing and trading fees for all transactions that are conducted under Shares to Share. The participating brokers of Shares to Share have also agreed to waive their portion of the transfer fee and brokerage. The charitable organizations that have been selected have undergone the necessary due diligence process and have been duly approved by an independent selection committee.
At least 500,000 populations live with some kind of disability. They are most of the time being left behind. We need to empower them, otherwise they will continue to be the liability. A lot of human resources wasted from this group of people.
We provide a lot of support for persons with disability who are young adults and adults. We have a social enterprise called Project I'm Possible, where we manage to hire all persons with learning disability to work here. We have a cafe, bakery, weaving, and we have an art gallery.
Purity of thought, word, and deed, that is action, is very important to be really successful. We must know some skills to be able to help us in paperwork. The grant from Shares to Share will be used for, one is sewing, handicraft, classical dance, and so on.
Our patients have to be fed, they have to be looked after. We look out for any sort of disease they might develop, and also those unforeseen circumstances. Thanks to Bursa's initiative, we can be a little bit easy on our patients in their family members.
Donations will all be channeled to organizations that are involved in the sustainable development of Malaysia. The Shares to Share scheme offers you the chance to do so in a simple and effective way.
Bursa's Shares to Share allows us to do good by donating our shares to charities. Join us in making a difference to the society by donating your listed shares.
Shares to Share is open to all donors, individual as well as corporates or other types of entities. You can transfer your listed securities via Bursa Anywhere app at a click. For more information, please visit our Bursa Malaysia website.
Hello, everybody. Welcome to today's webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is i-REIT, Property Investment for Beginner. So welcome, everybody. My name is Shane Chu. I'm the moderator for this webinar. So what exactly is i-REIT? i-REIT actually stands for Sharia Compliant Real Estate Investment Trust. So in this webinar, we are going to explore what are the differences between investing in properties versus investing in real estate investment trusts, and how can beginner get started to invest in property through real estate investment trust, especially the Sharia compliant real estate investment trust. So before we begin, as usual, disclaimer, whatever we share in this webinar is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you're 100% responsible for all your investment risk. Allow me to briefly introduce our speaker today. She's a licensed financial planner with Philip Wealth Planner. She's a certified financial planner by Financial Planning Association Malaysia. She's also a certified trainer by HRD Corp. And she also served as the secretary to FPAM Johor chapter. And she's none other than Miss Asna Asha. So good evening, Asna. How are you today?
I'm good. Alhamdulillah. Thanks, here.
All right, cool. So I will just stop sharing my screen and hand over the session to you.
All right. Thanks, Shane, for the introduction. So, Assalamualaikum warahmatullahi wabarakatuh. Hi. Good morning, everyone. Before I begin these sessions, I just want to roughly get to know my audience first. I just want to do a sound checkup. Can you hear me? If you can hear me, can you all please type 10? Let me see. Right, 10. Good, good. So, right. Then the next question for me to gauge is if you have experience in investing, sorry, if you have no experience or you have less than 3 years experience in investing, please type 1. All right. Okay. So if you have experience in investing but no experience in property investment, please type 3. Okay. Let me see my audience. All right. Good. Good. So if you have experience in investing and investment in physical property but are looking for diversification, just type 5. Is there any audience that match that criteria? Okay, we do have. All right. Good, good. Mr. Pikelim is, you have investment experience, but you are looking for diversification. Basically, roughly, I have a mix of good audience. Now, let me share my slides. Okay. Yeah. So, okay, let me share. Hold on. Excuse me. Okay. So basically, what we are trying to achieve today is, at the end of the day, what we are trying to achieve is we want to, as an investors or as a potential investors, you are able to actually know what is the features of i-REIT, what is i-REIT or Islamic REITs all about. And you also need to identify whether the pros and cons of investing in Islamic i-REIT, and also identify what is Islamic i-REIT available in the market. And of course, you want to know what is the current, based on the current market, what is the opportunities that you can tap into with the current trends. Okay, so we begin with simply just defining or understanding what is basically Islamic REIT. So Islamic REIT basically is an investment vehicles that owns, operate or finance income generating real estate investment that allow individuals to pool their fund, meaning that they might not have a large sum of capital. So we pool their fund into a one fund manager and then invest it or hire someone that has a professional experience to actually manage that portfolio and choose that portfolio, acquire that portfolio, and that portfolio is basically properties. So as someone who is new to investment, you might not have the capital to invest directly to property because you might have lack of knowledge, or you might have lack of time to actually manage your property directly. So and also you might not know which property actually to choose. So REIT enable you to actually give you diversification because it invests in a different sector. So namely, For example, the first one, retail. So retail basically investment in properties such as shopping centers, malls, and retail outlet. So investment in retail outlet actually basically can offer exposure to the retail industry and consumer spending. So for example, after PKP or MCO, people have a lot of disposable income. They have surplus of income at that time. uh, you know um, uh, Interest rate are still low, so they have a lot of surplus income, so they want to actually spend. So at that time, most of them go to retail outlet, or shopping malls, and then go and spending. So how do you want to benefit that kind of trends? One of it is actually in investing in REITs. So the second sector that REITs invest in is actually basically hotels. So hotels, where does it invest is they invest in hotels and resorts, and they invest in sectors that allow investor to participate in trends like tourism trends. So in whether is it domestic tourists or foreign tourists. So or like now, we are expecting that foreign investor is going to come to Malaysia to benefit from the depreciating, or the low foreign exchange from Malaysian ringgit and US dollar. So that is one of the trends that we want to tap into and benefit from as investors. The third one is industrial. So industrial basically invest in properties such as warehouse, distribution centers, and manufacturing facilities, and they provide exposure to logistic and e-commerce, e-commerce sectors. A lot of people are now, rather than going to shopping mall before, they also have this preference of buying through online. So we want, and where does they actually store uh, uh, their goods is basically in industrial and distribution centers. The fourth one is basically office. uh, for example, like KLCC, whereby there's a lot of office. Some of them are tenanted, some of them lease the office, for a certain period of time. And REITs actually invest in office, and then from the rental that they receive from the tenants, then they can uh, distribute back to the investors. So then next is the healthcare services. So healthcare services basically invest in hospitals, medical office, and also senior living facilities or wellness center. So now we know that Malaysia are going to aging countries. So we see more and more senior facilities, like in Cheras, if I'm not mistaken, there's one, and more, I think, are building up you know such facilities to actually to accommodate these aging communities. So that is something you want to consider when you invest in REITs. um, Next one is warehouse. Warehouse specialize in owning and managing large scales of warehouse and storage facilities, similar like industrial. Uh, and then next is we have car park and residence. So in Malaysia, sectors that usually people are heavily invest is retails, hotels, industrials, office, healthcare services, warehouse. We don't have so much in car park and residence, because usually for car park they are attached to retails. For example, like in Mid Valley, their parking attached, their car park rates or their returns, or the management is actually together under the same retails. So next, now we are looking why do we need to invest in Islamic REIT? Why should we actually consider in Islamic REIT? Okay, first is, of course, we are looking at regular income. REITs basically distribute a significant portion of their rental income to investors in the forms of dividend. In fact, they have disclosed whereby if, let's say, 90% of their earning or their returns, they need to actually distribute back to their investors. Only 10% are considered as withholding tax. Okay. Then the second one is capital appreciation. So some of the REITs, they are actually located at hotspots or central business district, whereby the properties increase their value much more faster as compared to other locations. So when that happen, actually, as investors, you might buying at when during the initial price offering, you might be buying at 1 ringgit, when over the years now the price has appreciated to 6 ringgit. So you can actually gain return from the capital appreciation. All right. Then the third one is the benefit of Islamic REITs. Basically, investing in REITs provide exposure to different types of real estate. Like you just see now, just see previously that there's a lot of sectors that you can actually invest, whether it's hotel, whether it's healthcare, whether it's office. So you have the option rather than investing in one particular. And diversification basically will actually lower your risk as beginner investors. You don't have a lot of capital, but at the same time you don't want the capital. If you put your capital in one basket, if let's say happen for the past 2 years, retails are not performing well because people are locked up. People cannot go out, people cannot spend. So if you put all the money into one particular sector, or chances are you might face a lot of losses as compared if, let's say, you diversify your investment in multiple basket, right? So the third, sorry, so the fourth benefit of Islamic or investing in REIT, whether Islamic REIT or REIT itself, is the professional management. These people are experienced professionals who have experience in handling property acquisitions, leasing, and management. Let's say, putting aside, if you decide that you want to invest a property on your own, you want to do it yourself, chances are you might not know where is the good location, because property investment is all about location. So you might wonder where is the current trend, where is the next location that the government are focusing on. So people that have credential or professional management know this beforehand, so they also know how to actually handle maintenance of the property, the wear and tear. If, let's say, for example, you just start investing in property, first you have to actually find a location, and then when you find the property, you have to find a tenant, and then you have to manage the rental income, and then after that you have to manage the maintenance of the property. After that, you have, let's say, for example, your tenant move out from your property, then you have to actually find another tenant, and the process going on. So as it might be testing for you as a new beginner, new investor. So they actually take up all that with their knowledge, and actually reduce your time to actually manage property. Last but not least is basically the accessibility. What I mean by accessibility is basically, in REITs, they offer a low barrier to entry. You don't have to have a lot of money. You don't have to have in-depth knowledge in property. So you can actually invest with a minimal amount of investment or capital to actually start investing in real estates. So let me give you an example of the comparison of cost between investing in Islamic REITs or REITs is per se, and also investing in physical property. All right. Okay. Let me change. Okay. Share screen. So far so good. if you have question, actually you can actually post in the chat box, or you can wait at the end of the chat sharing session.
Post the question in the Q&A box, not the chat box. Q&A box.
Sorry, Q&A box. I'm so sorry. Okay, thank you, Shane. All right. So let's say, investing in let's look at the cost involved in investing in REITs. So the minimum investment for REIT is actually you have to invest a minimum of 100 units, or what we call it one lot. So a unit, a price per unit for REIT can be as low as 50 cents per unit, but you have to buy 100 units, right? So 100 units multiplied by 50 cents is basically 50 ringgit. That is the capital, the initial capital that you need. Can you see? Shin, can you see the screen? Is it?
Yes, we can see the screen.
Okay,
yes.
so I'm here. So the cost of REIT is 50 ringgit for 100 units of REITs. So on top of that, you also need to pay broker fee. A few other costs lah. For example, you have to pay broker fee. Broker fee actually differs from brokerage. There's a few brokerage firm, but it differs. But let's say, for example, I just took one brokerage firm that charges 8% of your capital, or a minimum of 8 ringgit. So 8% of 50 ringgit is actually 4 ringgit. So it doesn't meet that 8%. So you have to charge, they charge you 8 ringgit minimum. So you also have to pay government tax, which is 6% of government tax. And then you also have to pay clearing fees, which is 3% from the cost of capital here. And for stamp duty for the first 1,000 unit, is basically they charge you 1 ringgit. So totally, all you need to actually start investing in REITs, in particular, the capital plus all other costs is basically 60 ringgit and 98 cents. Okay. But then let's say, for example, you want to go, you don't want to start 100 units. I mean, you say, okay, I have prepared my emergency. I have other more than 100 ringgit to actually start investing. Let's say you want to invest 1,000 units. So 1,000 units multiplied by 50 cents is basically 5 ringgit. So factor in all these costs, your initial cost is basically 558 ringgit only. And then I would actually suggest not to start a minimum of 100 unit, because the percentage of your sales charges as compared to the cost, right, is about 20%. If you just here, you have to pay 10 ringgit. That is about 20% of 50 ringgit additional, right? 20%. So when you invest more 1,000, your percentage of sales cost or sales charges is already reduced by half. So even though you can start with 100 ringgit, it's better for you to actually allocate maybe 1,000 or start with 500 ringgit, so that you can actually reduce the sales charges. So that is, I think, workable for anyone to actually start investment. Let's say, for example, that you're earning 2,000 ringgit. So with 200 ringgit, 10% of your investment, your income, you can actually regularly, if you regularly invest every month in Islamic REIT, or you can also accumulate your fund. Maybe once a year you want to invest, also possible. All right. But as comparatively, if let's say you invest in physical property, I don't know how old are you, but let's say, for example, new investors start investing at the age of 25 or 30. So you want to invest in physical property, that you have to decide that whether you want to for rental income or capital appreciation for flipping strategy. But let's say you decide that you want to focus property investment to get rental income. So you are looking at let's say at the range of price 200 to 300,000. Not only that, you have to prepare 10% of down payment for the house. I assume residential investment. You also have to prepare other initial like SPA legal fee, stamp duty, loan agreement legal fee, stamp duty for loan agreement, which in total, and this does not include MRTT, uh, mortgage reducing term takaful for your loan. So this initial cost is already that you need 42,000 to begin your investment in physical property, which is a lot. And if let's say you are starting your earning is 2,000 or 3,000, that is huge actually to prepare and pose a huge risk because you're putting all your investment in one basket. That is initial cost. You also need to consider your monthly installment. So let's say 300,000 of property, you are looking at monthly installment of 1,277 that you need to pay every month. That will also affect your debt service ratio because when you take borrowing, it is not only focused on property investment. You might also need to consider your other borrowings like your education loan, your car loan, or maybe some of you might have personal loan. So some people might not, even though earning high, like 10,000, 50,000, but they might not be able to actually start investing in physical property because they have burst their debt ratio. As compared to investment in i-REIT, you only focus on your cash flow. You have surplus, then you can start investing. It doesn't affect your debt service ratio. Right, let's go back to the slides. So the investment. Now, we have talked generally about REITs. So now we go to Islamic Sharia compliance REITs in Malaysia. So how does it differ from normal conventional REITs? So basically, Sharia compliant REITs have two main character. One is it has to adhere to Sharia principle, meaning that your earning or your borrowing cannot be involved in riba or maisir or gara. This is the concept of Islamic Sharia principles. And also, even if let's say you don't earn in something, you don't involve in riba, you also the business activities in risk also must devoid from unethical or non-permissible activities. Oh, sorry. Is my slide? I think my slide is still.
You're still on your Excel, not on your PowerPoint.
All right. Okay.
Yep. So you gotta change it to your PowerPoint.
Yeah, I just noticed. I'm so sorry, yeah. Share screen. Okay. All right. Okay. So, apologize for the mistakes. Okay. Now, going back to Sharia compliance risk in Malaysia. So one is you have to adhere to Sharia principles, and the second one is your business activities cannot be unethical or non-permissible activities. So the Sharia Committee, Security Commission Sharia Committee has listed out what is the non-permissible activities that that isn't, basically they are not allowed to do or invest in. So the first one is basically financial services. So financial services, you cannot your tenant or your business activities cannot be a financial institution that has financial services that charges or riba or interest based. So you cannot that if you have that or if you have that in your tenants, that one of your tenants is involved in financial services that based on riba, they give you some allowance but not more than 20% of the return Okay. The second one is gambling. So gambling or gaming activities is not allowed in Sharia compliance REITs. The third one is manufacturer or sales of non-halal products such as pork, such as alcohol or prohibited substance. So that is a bit non-permissible activities that is considered. Conventional insurance, they do not involve in properties related to conventional insurance companies or product. In fact, even the REITs, if they want to take up or engage risk management initiative, like fire insurance, they have to take the fire takaful one, or household or property coverage, right? They want to protect some of their properties. They have to take the takaful instead of insurance. Next, they cannot entertainment activities such as nightclubs or casinos. That is a non-permissible activities for Sharia REITs. And then we also cannot. They also cannot engage with tenants that are selling sales of tobacco product or related tobacco product. Stockbroking that is not non-Sharia compliance is also not acceptable. And last, hotels and resorts, because some of the activities in hotels and resorts are deemed as a non-permissible. All right. So this is the activities that not you, but then the fund manager or the top management, if they want to lease their space, they cannot allow this kind of activities in their premises. Okay, like I say, income of REIT must be of the benchmark that Security Commission has laid out. Okay, this is the structure of Islamic REIT. It's similar as a REIT, but they have one additional which is a Sharia committee. And this Sharia committee, not by SE, but the Sharia committee in the REIT itself, they are the one who are going to monitor all these activities. Or the fund manager will actually need to seek their advice and ask, is these activities are permissible? And these people basically have the credential, like for example, this guy Nur Gadut is basically previously Mufti Johor. Okay. Actually, I have a link. So he basically will have the guidelines. So in order to ensure compliance with Islamic REIT guideline, so they have the tenants shall operate permissible activities. The rental income shall be guided, and 20% benchmark is adhered to. And then the manager will obtain and maintain takaful scheme coverage on the all asset of Asalam REIT. This is one of the, so they will ensure that the manager adhere to this. And if you see, you can actually see whether these people have the credential, whether they have the credential or the credibility to actually advise the management. So yeah, okay. So each REIT will have their own Sharia committee. If I'm mistaken, like KLCC, they hire CIMB, Sharia advisor. Okay. So yeah. Okay, next. Oh. So this is all the listed REITs in Malaysia. So Al-Salam is basically a diversified REIT that focuses on acquiring and investing in office building, retail properties, and industrial properties. Their aims is actually to provide stable and consistent income distribution to all the unit holders. And the second one is actually AME REIT. AME REIT is quite new. They just introduced in last year, September, if I'm mistaken. So AMA REITs basically focus on industrial. Right now, most of their invested properties are in Senai Airport City. So they invest in high-tech manufacturing, warehousing, and logistic facilities. We also have the third one, which is Al-Alqa Healthcare REIT. So Al-Alqa Healthcare REIT is a niche REIT. Why I say niche? Because they only focuses or specialize in healthcare related properties in Malaysia. They focus on investing in hospitals, medical centers, wellness centers, and not only in Malaysia. I think they also invest in overseas abroad. Okay. The fourth one is actually Axis REIT. So Axis REIT key feature is they invest in industrial properties, including warehouse, factories, logistics, and facilities. And last but not least, KLCC Property REITs. So KLCC Property REITs invest in, it's actually a combination of KLCC Real Estate Investment Trust and combined with KLCC Property Holding. So they focus on retails and also office within the vicinity of Kuala Lumpur. So we will actually look at what kind of ownership that they have later on. So one of it that maybe they are known for is actually Petronas Twin Tower lah, right? So Q&A. Oh, okay. So why is hotel and resorts not permitted under Sharia compliant REIT? Because some of the activities or that they provide is basically, you know, they might have selling alcohol beverage, or they might have club and casinos, or they might have or they might have burst the 20% benchmark. Like KLCC, right? KLCC Property Holding, they also have one of the ownership, Mandarin Oriental. But the earning from that sector, that hotels, does not exceed that 20% benchmark activities. So that's why it's permissible. Like Amanah, Rakyat, maybe they have exceed that. That's why there is not considered as Sharia compliance. What are the dividend payout from all this REIT? All right, mostly I will actually share with you later on consideration later on. Yeah, I will share that. Okay. Remind me if I didn't answer your question, but I will share that. Okay, so this is a summary of what is the comparison between REITs and Islamic REIT in terms of business activities. So business activities, generally REIT, conventional REIT does not have restriction or limitation, but Islamic REIT have activities that they have to adhere, like just what I shared. They also don't have, doesn't have restriction on source of income. Their income can be from any of the tenants, but for Islamic REIT, they have limitation. It has to be from Sharia compliant activities, or it has to adhere to the 20% benchmark. You cannot be more than that. What happens if your earning is exceed that? Either they will reclassify you as non-Islamic REIT, or the management has to reduce the earning below the benchmark. Okay, there's also no limitation in terms of borrowing for REITs, but for Islamic REITs, they have to actually utilize Sharia compliant financing methods. It doesn't matter whether it's a murabaha, ijarah, or musyarakah to fund property acquisition or development. You cannot borrow from conventional bank to actually finance your investment activities, right? And just now, like I said, for takaful, even for takaful, they have to engage with the takaful operator or takaful provider, unless there is no takaful operator or takaful provider that provide that can provide the services that they need. only then they will actually take conventional. But again, they have the Sharia committee to actually advise them whether can they do that or not, right? So risk and consideration. You have heard the benefit of investing in risk, but you also need to know what is the risk. There's still a risk because this is basically an investment. So one is market risk. Risk or Islamic risk can be affected by fluctuation in the real estate market, which may impact property values and rental income. We can see clearly during MCO what kind of market during that time, what kind of market is affected when people cannot go out and spend, when tourists cannot come and to Malaysia, when our ringgit Malaysia falls down. So market plays an important roles in REITs performance. Interest rate REITs, rising interest rates can actually increase the borrowing cost, and then in return they will also impact their profitability of the REITs. Okay, so the increase of interest rate, meaning that there is increase of cost of borrowing. Liquidity risk, even though in terms of risk, you can, as an investor yourself, you can actually liquidate your investment, your risk investment. But this actually considered, for example, if let's say the property management want to sell off the property itself, that is what they meant, that it may take times, and it can also depends on market condition. Regulatory risk, changes in the regulation or tax policies can also affect the operation and profitability of the risk. Okay, when changes, the government change, so their policies might change, their strategy might change, the way that they handle the economy might change. So there is a regulatory risk when you invest in risk. So now the key factor in selecting REITs. One is basically you have to assess the quality and diversity and location of the property owned by the REIT. You also have to assess the occupancy rates, because higher occupancy means the stability of rental income, that, and also meaning that the market is doing good. So if let's say market is not doing good, there is a lower occupancy rate, lower earning, then it will actually impact your return. The management team, different management team will have different way of managing. So you have to research the expertise and track record of the Islamic risk of management. The financial performance, how to review the financial statements, including their rental income, expenses, and dividend history. Also their regulatory compliance. This one to ensure that the i-REIT or Islamic REIT complies with relevant regulation and government standards. So okay, now how to, the question just now, right? How to what are the dividend payouts, and can I check for the REITs listed on Bursa's website? Yes, you can. So so how to check, where to check? So one of it is the annual and semi-annual reports. Okay, let's see. Let's pick up KLCC lah. Okay, let's go live and go to the website itself. Okay, let's pick. Let me share here the website. Yeah. Okay, let's pick KLCC. So when you want to study, KLCC property holdings. Okay, so where is the information that we can gain if we want to research? One of it is from their website, from their Bursa marketplace. So here, KLCC, you can also investor relations. Usually they will put in annual reports. So let's click at their reports. Okay, so annual report basically will have all the information like occupancy, whether there is a property growth. So let's look at integrated annual report. Hold on, yeah. Actually, I have downloaded it, but okay. Okay, so here you can actually find all the information of the property invest. So I should, okay, so you can see more. Can you see it? Okay, in annual reports, basically, or quarterly report, they will actually, this is annual report 2022, they have financial statements, where they are, what kind of property that they invested in. So here, page number 4, they actually show they have 7 properties under KLCC REITs, which is Menara Maxis, Petronas Towers, Menara 3 Petronas, Surya KLCC Mandarin Oriental, Complex Zaya Bumi, Menara ExxonMobil. So okay, when you invest in KLCC property REITs, this is the property that you invested in. Okay, going down, they also shares details of each properties. Okay, here they also shares occupancy. So okay, despite COVID, despite restriction, the occupancy maintained at 100%. So you know that MCO doesn't affect their tenancy. For this one is for Petronas Sing Tower. Let's look at other property. Menara Petronas, they have all the information. Occupancy at 89%. Menara ExxonMobil is at 100%. Complex Zaya Bumi, 100% occupancy. So any REITs that have occupancy 90% above, that is considered as good already. Have anticipate. Okay, which one that doesn't that is only 44%. 44%. Mandarin Oriental. Okay, and Mandarin Oriental does they also if I'm mistaken, they also MICE, the exhibition center is also under Mandarin Oriental, if I'm mistaken. I think they explain it here. Right? So this is the structure. Go down. Okay. You can also, in annual reports, usually you can also read the direction of the management. Okay, from their questions, you can also know where they are going to invest yet, because in KLCC, right, there is also upcoming like Menara 188, yeah. So are they going to invest in that? So it's all in here. You can just if you write in, if you so they have this market outlook. So bacalah. It's a bit lengthy, but yeah. The exchange, the future trend, the exchange rates, TRX, Warisan Medical Mall. So are they are they going to invest in that? So we can read from the annual reports. Okay. Where else that we can find from the website? We can also find financial performance or investor kit. Some REITs provide that, some REITs doesn't. So in investor kits, so they have fact sheet. The toolkit. So fact sheet, basically, usually what is inside the fact sheet is basically the compressed information of the property. Let's look at fact sheet. So you need to have all this information to make informed decisions, because then you know where does your money goes, whether is it a good investment or not. So this is fact sheet. They will actually See, they summarize everything here. The value, the financial highlights. Like for example, right, the hotel, right? How come hotel is not non-permissible, but is they consider KLCC as Sharia? If you see the earning, it's just a fraction of the total earning. So I think they didn't burst the benchmark. The gearing ratio. So we are looking at gearing ratio means how much money that they have they borrow from their total assets. So they only borrow about 18%. So there is more money, or they have enough money to actually invest in other properties. So if let's say that REIT has a gearing ratio more than 50% or 60%, meaning that they are already highly debt, that they have high debt ratio, right? So you this one you can see that they have more opportunity to invest in other properties. Okay. All right. So the next one, if you have read through all the annual report, where else that you can actually find information on REITs. So let me change to the slides. Okay. Bursa Marketplace. You can also find information on Bursa Marketplace. Usually, if let's say you are looking for announcement, any company announcement, you can find in Bursa Marketplace. Or if let's say you want to look at their year-to-date return. Okay, let me share the year-to-date return. Please let me know if let's say you didn't see the website that I go through. Yeah, maybe sometimes it got stuck here. So for example, see here, it's all the REITs listed. You go to Bursa Marketplace, Google Bursa Marketplace, and then, okay, let me go from, okay, Bursa Marketplace, and then you go to share market, and then you go to REITs. So here, they will list out all the REITs available, Sharia and non-Sharia. So Al-Aqah is Sharia, Asalam is Sharia, Aman Raya is non-MAE. So just now we look at KLCC, right? So let's look at KLCC. What is the performance of KLCC property REITs? So you know that, okay, the current price is, if you want to buy, is at RM6.77, 76. Sorry. And if you want to look at the performance yearly, are they pricing at a high price, or are they pricing at a low price currently? So today's price is RM6.76, but 52 weeks low is RM6. So they have sell at a lower price before this within 1 year. So 52-week high is RM7.80. So you also have analysts. This is a combination of analysts, whether analysts say whether to hold or to buy or to sell. So right now the recommendation is to hold. So you can find information. Okay, here the profile, the charts. Some people like reading charts, right? Or if let's say you don't want to go to the website, you want to download the report, then you can actually download it here. Okay, that is Bursa Marketplace. Next is where else that you can get information if let's say you want to Morningstar, independent research body. Let's say you want to know what is the year to date from 1st of January 2023 up until now. Morningstar Malaysia, is it? Okay. Until now, what is their performance? You know the price today, but what is the performance up until today? Okay. So you can also check in Morningstar as a screening tools. So you can select sector. Sector is basically real estate. You don't have to just choose REIT, you just choose all, and then you just show more, or show more, not show more. The result will be up. Okay, so all the REITs listed in Malaysia will be here. So short-term performance is 1 day, 1 week, 1 month return. That's year to date, 6 months year to date. So KLCC. In fact, you can also do comparison of all REITs. Which one is better? I just show you KLCC, but you can also, make an Excel sheet and show and list out all the Islamic REITs available and make a comparison. So KLCC REIT. So year to date is 4.69 return percent year to date return. So there's an increase. Okay. You want to also, let's say for example, you want to invest in long term, maybe 1 year, 3 years, you want to make comparison. If let's say I invest in other investment vehicles, which one will actually give me a higher return? So you can also see. Let's look at KCC again. So basically, when we talk about investment in REITs, we are looking at about 4 to 7% of return. So this is 10-year return. Is it 10 years? No, this 5 years. 5 years annualized return, 2.44%. That is not long term. Long term maybe about 10 years. For 10 years, do they give? Okay, 4.76%. So average, usually investing in this, you are looking at 4 to 7% of return. I usually, personally, if let's say I want to see whether the performance of their peers, I will make an analysis of, I will make an Excel sheet and check the analysis. So actually, I have done a simple comparison. So this is what I did just now, just before the session started. So I listed all the REITs available, Islamic REITs available in Malaysia. So I look at the year to date, 1 year annualized, and I compare. So if you look at here, right, year to date, the performance, the highest performance is As-Salam. The second is AME REITs Industrial. So basically both REITs are industrials and also warehouse. So you know, okay, right now the trend is that. But AME REITs, why the information is not available? Because it's new. But you also need to look at if you are looking for capital appreciation, whether have they increased the price since their introduction of the REITs. So they like KLCC, the REITs is listed in August 2004 at RM1.67. Now it has appreciated to RM6.80. So meaning that, okay, here is a good REIT. And this is the data as at today. Their gearing ratio, just now you see 18%, right? Now it's actually lower, 13%. So this is data. And you can also do a comparison month to month, and you see whether the NAV has increased, whether the property yields has increased. So because increase of property yields, increase of NAV means increase of distributions means the REITs are performing well. So this is me just, usually when I want to do a comparison between the peers, I'll do this. Which one that I want to invest in. So I will do this bit of comparisons. You can find the information from these websites, either Morningstar, Bloomberg. If you have subscription in Bloomberg, you can do so. Okay. I think, okay, let me just speed up a bit because it's already. How many more minutes I have, Yashin? Okay.
You may carry on as usual, but speed up a little bit.
Okay, let me speed up a little bit. Yeah. So now that you know why to invest, where to invest, and how to invest, you can start your investing. If you don't have CDS account, investing in REITs, basically you can invest in unit trust, or you can also invest in stock exchange. Because for today, Bursa has sponsored us, so we only focus on how to actually invest in stock exchange, right? So basically, what you should do is, if let's say you want to start investing, open a CDS account. Okay, I didn't make a slide. Okay, open an investment account. Go to this website, Bursa Marketplace. Just now, go to open trading account. All right. You can also go to the brokerage firm itself. Go directly to brokerage firm and open there, or you can open here. Open a trading account. Click here, Bursa Marketplace. Open a trading account. Choose equities. So they will actually show you all the broker firm that is available. You might need to call them first, because sometimes they need reference remiser ID or anything. Let's say for example, I'm from Philip, right? Let's say for example, I choose from Philip Capital. So I fill all the information, my name, my email, my phone number, my state, and then let's say for example, I choose Johor. I'm from Johor. So I can choose whether to go to Skoda and everything. So I can just submit, and then I wait for them to actually call, and then they would assist me on how to open the account. Okay. No wonder I didn't share. Let me share back the screen. Here. Sorry, I didn't. And the slide is still there. Okay. Here. Open a trading account. Go to Marketplace. Open a trading account. I repeat this now. Okay. Then equities. Then choose all the broker firm. Okay. All the broker firm, everything. And then I choose Philip Capital, and then I fill in, and then I submit, and then they will call me. If online, like CIGS or M+, you have to find the remiser's ID, then you have to key in, and then you follow the process. So basically, you can do it online itself. Okay, if you don't want to go to the broker firm. Okay, and then the next step is they will actually tell you how to open a trading account, and then you have the trading account, and then you access their platform, and then you can start trade. Simple as that. 1, 2, 3. So next, why is it stuck? So where to invest? Okay. Now you know. So what are the opportunities that we have currently? So now we are looking at here year-to-date sector performance. If you see the slides, right, you can see that FBM's KLCI is still negative. There's only a few sectors that has positive performance, which is utilities, property, construction, transport, and REITs. Even though REITs doesn't, perform as good as utilities, but they are positively returned. Their performance are positive, not positive return. Their performance are still positive. This is as at 30 June 2003. So there is opportunities, good opportunities for you to come in as as today. For now, you can invest it. So why? One of it is because one of the current trend that are coming is because the reopening of international borders. China are reopening. We are expecting influx of Chinese tourists to come to Malaysia, even though they delay, but we are expecting more, because if you see, right, the number of tourist arrival in 2000 half year 2023 is actually equivalent to annual arrival into 2020. So the numbers are picking up. So when the tourists arrive, they will actually spend in retail, they will spend in hotels, so there is opportunities there. This is tourist arrival that I derived from Tourism Malaysia. You can see the numbers are picking up. As at February, the number China tourists is at 49,000, but in 2019 pre pandemic 200,000 numbers. So they will grow. Definitely, we are hoping that they are going to come and spend. Even if, let's say, China delay their reopening, other countries like India and everything will divert to Southeast Asia as their preference location. Okay, so tourist arrival. So this is tourist arrival and receipt, how much they spend when they come to Malaysia. So from, let's say, from China, right? So 400,000 into 2020, so they spend about 4 million in Malaysia. 1.8 million Malaysia tourist receipt, 1.8 million. So that's it will actually, if let's say you want to pick on that trend. So tourism, REITs that invest in tourism sectors will definitely be a good REIT to focus on. And the second one is industrial REITs, warehouse, office. That is something. So far, the market analyst has give a positive outlook. All right, I think this is the end. So in conclusion, REITs are convenient and is accessible. The good part is it has diversification and is professionally managed, and it gives you returns, both total return, both regular dividend income and capital appreciation. As compared as some other investment, they might only have you have to choose either capital appreciation or rental or dividend income, right? So the benefit for Islamic REITs is because it for Muslim, adhering to Sharia principle is very important. For non-Muslim, investing in Islamic REITs this is because usually Islamic REITs it also align with ESG, sustainable. If you want to invest in a sustainable investment, usually Islamic REITs is aligned with ESG guideline. Okay. All right. I think that's about it. Let me see question. Yeah.
All right. Thank you so much, Asna, for your presentation on Sharia compliant real estate investment trust. So I'm sure many of you here would have understood what exactly Sharia compliant real estate investment trust. So if you have any questions to ask our speaker today, you may write them in the Q&A box. We will address them accordingly. Okay. But I believe, Asna, you have addressed many questions along your presentation just now, right?
I hope so.
I think you have addressed the dividend payout questions by most, right? You have also addressed Shalini questions on the list of the real estate investment trust listed on Bursa website. Am I right? Okay, if you feel that the question has not been sufficiently addressed, then you may address it in a short while later. So the next question by Shalini is that what are the steps to buy the REITs after I've done my research? Will Bursa help me to purchase the REIT?
No, Bursa will not help you to purchase a REIT. You have to purchase, like I say, once you have open your trading accounts, you have to, like stocks, you have to invest from the trading platform. You have to buy and sell from the trading platform. If you have engaged with Remiser, they can actually help you with that. Yeah, Bursa is just regulatory body, and also they also have a research body whereby they provide information to the public. Yeah.
Right, Asna, your video camera is not working.
Oh, is it? Okay, sorry. Yeah. But my voice?
Yes, yeah, your voice is being transmitted. Yeah, now it works again.
All right, sorry.
Okay. So the next question is, will interest rate affect the share price of REIT? And which REIT have above the average borrowing?
So far, if you look at the one, the Excel sheet that I did, right? Can I share the
Yes, please
slides?
go ahead. Please go ahead.
Okay. So far, none actually has exceeded that 50%. 50%. None. If you see, I can also see the gearing ratios is only about 30%. Axis is 36. Al-Aqah Healthcare is only 46. Al-Salam is 48, and AME is only 11%. So none have actually exceed that 50% range. So they are okay. But if you are looking at REITs that have more money actually to spend to invest for any good opportunities, then look at the one that with the lower number lah.
Yep, thank you so much for sharing your perspective. If I may add some colors to this question, if REIT, because the guideline is that you must not exceed 50% of the gearing ratio. So if a REIT is very close to reaching the threshold, which is 50%, then they may run the risk of being hitting the 50% if the properties are being revalued, because the properties are being revalued on a regular basis. So if the property prices, the value of the property comes down, then their gearing ratio might change. Okay, it might become 51%. All right. So so they have this risk. So to be safe, I think if a REIT is below 40%, I think it is safer. Okay, I would believe that anything that's above 40% will be quite close to the required threshold for them to operate as a REIT. So that's just my my view on this matter. Okay, so how about interest rate? Will it affect the share price of REIT?
It doesn't affect the share price. Usually, it will only affect the cost of borrowing.
Okay.
For me, yeah.
Okay. Yeah. So of course, the higher the interest rate, then the higher that the real estate investment trust will pay in their installment to the bank, right? In this case of, you see that, Al-Aqah Healthcare REIT and also Al-Salam has a very high gearing ratio. So in that sense, that it will increase their installment or the monthly commitment to the bank. But having said that, if I may add on to that question, is that, interest rate will affect their finance costs, but it will also serve as a benchmark for investors who are seeking for yields. So for example, if I'm a conservative investor and I benchmark the returns given by different products, let's say fixed deposit give me 3% return, a bond, investment grade bond give me 5-6% return, for example, at that stage, right? I will also compare. Should I go for investment grade bond? Should I go for fixed deposit, or should I go for REIT? So the higher the interest rate, usually it will affect people. It will make people to divest from REIT and go to fixed deposit. Okay, I'll go to other safer form of investment, because the REIT is still subject to volatility of the market price, but a fixed deposit is not. So the higher interest rate, it may cause an outflow of REIT sometimes. All right, so this is just how it affects the market demand or the appetite for real estate investment trusts. So Asna, which REITs are paying quarterly dividends? That's the next question.
You can check if you want. I actually personally didn't know all, but you can actually check in company announcement at Bursa Marketplace or Bursa Malaysia. You look at company announcement. If you go to the company announcement, right, you just go as okay. Let me go to company Bursa websites. Wait. Bursa websites. Okay, go to company announcement. So you just, let's say for example, Al-Aqah here. Okay, search company announcement. Or you can also check in annual reports if you can see, but I usually go to annual announcement, search announcement title, search dividend. So interim dividend, final dividend. So here, Al-Aqah have June, February. So Al-Aqah provide. So let's say a company, you can search here to find which one that have give quarterly dividend from that 5 Islamic REITs available in the market. Okay, does that answer your questions?
All right, thank you so much, Asna. The next question is by Ahmad Najib. Okay, since Asna, you stay in southern part of Peninsula Malaysia, so he's asking, what is your view regarding the prospect of Forest City in Johor? Are people investing in REITs for the property there?
Islamic REITs, no. None of the, as far as that I know, one is Forest City is actually residential. So none of the Islamic REITs listed invest in residential, mostly in industrial, office, healthcare, and everything. So if you invest in Islamic REITs, basically you don't have that exposure in Forest City. But having said that, Forest City now, because of the reopening of the borders, right? People who are working in Singapore are renting in Forest City. So in terms of rental, there is a rental. Whether it covers the rental covers the installment, I'm not sure. But a huge number of people who start working back in Singapore are choosing Forest City to stay there because it's close to Tuas borders, to Tuas immigration checkpoint. Yeah.
All right. So at the moment, there's no REIT that give you exposure to Forest City.
No.
So yeah. The next question is, what is DPU, distribution per unit?
Distribution per unit is basically you want to see whether how much the units. Oh, let me find the words in English. How much is the return that you get per unit? Yeah, if is that correct? Yeah, if did I
dividend? How much dividend they want to issue?
Did I I lost in English. Okay, yeah, sorry, my language. Yeah.
No worries. So if you have any more questions to ask our speaker today, Asna, you may write them in the Q&A box. Okay, let me see if there are any more questions. I'm sure today all of you have learned about real estate investment trusts, as well as what makes a real estate investment trust Sharia compliant. They must adhere to the Sharia principles, okay, by not allowing the tenants to, by not accepting tenants that conduct non-permissible activities. So that will make it Sharia compliant real estate investment trust. And at the moment, we have about 5 Sharia compliant real estate investment trusts. So the benefits we learn about investing in REIT is that it aligns with the Islamic principles, okay, as Islamic REITs adhere to the Sharia guidelines, and it helps us to mitigate the risk through diversification and through professional management, and it gives us potential for steady income and long-term growth. So these are the benefits for investing in REITs. So if you don't want to manage the property yourself and want to consider, investing in a prime location without causing you a bomb, you may consider to invest in REITs like KLCC staple securities that enable you to own properties within KLCC vicinity. So the next question by Mose is, what are the additional criteria to consider besides gearing before investing in REIT?
Like just how I shared just now, the occupancy rate is important. The top management, you might need to choose the property also, where does the property invested, whether you can see the comparison between 2022 2020 19 up until 2022 2023, whether is there any property growth, do they have additional assets, or are they planning to acquire more properties? Because acquiring more properties meaning that there is a potential of a higher return. So that is other additional criteria that you want to look at. Once you have selected one the particular REITs, you want to see in details what are their strategic direction, right?
All right, thank you so much, Asna. The next question is by Kevin. This is an interesting question. Do Singapore REITs perform better than Malaysia REITs?
Okay. Actually, for today it's Islamic REITs. But if let's say REITs in general, yes, SG REITs perform better than Malaysia REITs. All right. But for Islamic REITs, we don't have that. We don't have that in Singapore. We don't have much. The one that we have is global REITs. We have that one in Sharia compliance. But that one you have to go under unit trust rather than stocks. Can I say that in this session? Don't know whether I can say that. Yeah.
All right. The next question, let's do one last question by Mio Iswan. Okay. Are there any new Islamic REIT in the future that will be listed on Bursa Malaysia?
Not that I know of. But I'm curious to see which Islamic REITs, either Axis or either KLCC are they going to invest in all these big building like TRX and Menara PNB. I'm interested to see, because big companies are moving there. A lot of tenants are moving there, right? So I'm just curious. Yeah.
All right. So what I need to do is stay tuned in the development of REITs. Okay, pay attention in any new listing or not. Then you will know whether any new listing of the REITs is Sharia compliant. All right. So we have addressed all questions on our panel today. So we'd like to thank all of you for staying here until the end of this session. So ladies and gentlemen, you just heard from Miss Asna Ashad, who is a certified financial planner with Philip Wealth Planner.